Okay, so the first thing I want to talk about is the level trader's dilemma, which is the exact dilemma that I go through because I trade support and resistance. So there's four main things that I could do. First thing, I could come up to the support and resistance and bounce directly off. This is ideal, but in reality, this almost never happens. Sometimes it might approach the level and then fade away early. Sometimes it might just go just a little bit past the level and you think you're wrong, and then it will go the way you thought. And then there's sometimes when it'll just blow right through and break out. So what exactly is going on? So there's three key elements that are happening when you approach a key support or resistance level. There's absorption, sellers fade, or buyers jump in. There's only three things that could happen. So let's take a quick look, one more second. So here we have it bouncing right off support. So that would be buyers jumping in. Here, or in this case, it'd be sellers jumping in at this point. And here, buyers fade. So this is the opposite case because instead of it bouncing off support, it's bouncing off resistance. So buyers fading here. And here, buyers are jumping in. Here, sellers fade. Or buyers fade, I'm sorry. This is the opposite of what I was thinking. But so here, the buyers are strong, and then buyers fade, and sellers come in. You see how either way, it's either the buyers or sellers have to come in. And here, the buyers just kept going strong. The sellers never jumped in. The buyers didn't fade, the sellers didn't jump in. And that is the criteria for a breakout, which is why they have such a low probability of actually happening, is because you need buyers to jump in and sellers to not fade. Wait, so you need buyers to not fade, and you need sellers not to jump in. So, oh, perfect, here we go. So here, buyers jump in. This is exactly what I want. So buyers jumping in, there's a bunch of selling going on. It's approaching that support level we were talking about, and it might go just past it, but then what you'll see on the tape is that the sellers slowly fade. And what I'm looking for here is a trigger. And so that's in price action on support or resistance level. And I usually think it will obey the support and resistance and bounce. And my risk analysis, I will show you how I do that. So first, let me go back. I want to say, so my risk analysis is I define an entry point, an exit point, stop loss, and profit target. Then the final step is execute. So here's a quick example. Tesla. Let me simplify this for you for a second. So here, sellers really jumped in, and buyers never really jumped in, but if the buyers aren't jumping in, sellers are fading. So here, sellers are slowly fading comparatively to this huge candle here. It's on the 15-minute. So here we see the sellers slowly fading. And here, once we got to this support level near the 700 level, we really see that some short sellers really tried to jump in and continue the trend down. But sellers were fading and fading and fading. And after everyone sold from here to here, there had to be some reaction where the buyers jumped back in. So that's where I get to my point, is that when you look at a higher time frame, you can really define these levels of major support and major resistance. And so first off, we see that this level is a huge support level, and as well as here, and that this level is a major resistance level. I had this level drawn a few days ago, but my point is, once the price got to this level, I created my risk analysis. So my trigger is it near this level, and it broke up. And so while it broke up, I'm watching the price action right on the pivot, this whole area. And while it's consolidating, I say, okay, after it makes one high, too high, gets rejected, I quick say, okay, is that the highest it's going to go? And if it's going to stop there, can I look for a reversal? Because it is a very strong point of resistance, as I mentioned earlier. So if we look at this quickly again, we can see that that point right there is a pretty strong pivot. A huge gap there. It broke it, retraced it here, and then came back down. But then it came up. And so since it broke it once clean, we would expect this level to hold as resistance. So, with a higher probability of it going down at this level, here's what my thought process is. So once I find it, start to consolidate, I draw my risk analysis. So I'm going to risk highs here, and even my goal is to get in anywhere in this range. So above the pivot is my trigger. And once it crosses down here, it did it once there, twice there, and a third time here. So to be exact, this would be the first trigger, right? We have a trigger, a hypothesis. So now that it broke that support, and now that gave us a trigger to say, all right, it's likely to continue down. My hypothesis is I think Tesla will continue down after breaking that resistance. After showing it did not have enough buyers, so buyers were fading and sellers began to take over. So my risk analysis is what I was doing.